Victoria Scholar joins me now from London for more on the markets. Now, the governor of the Bank of England says inflation will be bumpy this year. It seems like regulators are just as confused as investors. Sounds like a nightmare.
Yeah, well, as you mentioned, that inflation data we saw this morning came in line with expectations and actually below the 2% target, but sharply up from the prior month, which is why investors are getting a bit concerned about the prospect of rising prices. We are seeing serious signs of potential inflation creeping back into the economy, whether we look at wages, oil prices, base metals, the likes of copper or aluminium. And inflation is an issue that hasn't really reared its ugly head in a serious way since the 1970s. So, something that most young investors have never actually experienced. Some analysts believe that this risk is just transitory as we emerge from lockdowns and COVID, but others believe that it's here to stay. And that's really the real question. And we know that markets have enjoyed a significant gain over the last year, and we are starting to see the outlook become a little bit more shaky.
So, they say uncertainty is worse than any other risk for investors. At the same time, we have the European Central Bank warning that companies could be burdened by too much debt and that they might have to take steps to help them out. How do you balance bringing down prices while keeping the cost of borrowing low?
Well, this is the exact conundrum that central banks around the world are trying to grapple with. We know that loose monetary and fiscal policy helps to boost economic growth, of course, but it can have that unwanted inflationary side effect. On the flip side, tighter monetary policy that can help to calm down price levels, but it can also weigh on economic growth. I think that given the strength that we've seen in terms of corporate earnings and the fact that we are seeing a major bounce back in terms of economic activity, central banks could actually afford to raise interest rates a little bit. A small rise wouldn't necessarily have a huge impact on the economy, but it would at least signal to the market that they're serious about reining in inflation. And yes, that could prompt some kind of a market correction, but that's not necessarily unhealthy.
So, no alarm bells just yet. Thank you so much, Victoria Scholar there from London.